Hey guys, welcome back to Be Rich. Before we get to the video, I know all of you are waiting to see what we have in store for you today. But before we do, there's an important disclaimer which we have to put out is that we are not SEBI registered advisors. We never claim to be, and you have to take all your investment decisions in consultation with a SEBI registered advisor or someone who's competent enough in that field. We are not those people. We are purely just giving you information and discussing it amongst ourselves as a purpose of a hobby.
Good evening and welcome back to Be Rich. I'm back here with Sashwath today. We know they're still traveling. So I thought we will have a discussion on the US fiscal deficit. Basically, government is spending much more than what their revenue is. And this is the premise with which a lot of people attack the dollar. And in fact, in so-called Austrian economist has released a book saying the end of dollar. So this is why people say at some stage the world will not accept dollars anymore. And if they do not, then inflation will the dollar will collapse and the
Price of imports
will make it very difficult for America. And that will be the end of the dollar. Things are not as smooth as what they prophesize. Of course, the US fiscal deficit is a big problem. But this will it will take a nuanced approach. In my opinion, the cost of money in US is going to go up. You are not going to have money at 0% interest anymore because it is not possible to confine the money within the banking system or with the wealthy people. Money will leak out to the middle class and goods and services will become costlier. That is the impact. And the Fed will be forced to keep interest rates higher to make sure inflation does not go out of hand. That is the outcome I think will happen. Let's take a look at what Bill Dudley has said.
Yeah. So Bill Dudley, the former New York Federal Reserve president, basically said that, look, the federal deficit will rise to $1.9 trillion from $1.5 trillion as previously estimated in 2024. So they've added $400 billion in terms of borrowing now. And this is double of what it was in 2019. And what people are talking about now is the risk of bond vigilantes with an uprising like in 2022 when bondholders revolted in the UK, where after disastrous fiscal policy, we saw that bondholders pushed the short-term interest rate for gilts from 1.9% to 4.5%. This was a huge rise, and this was a revolt which happened in the US as well during the 90s. So the US has seen this in the past and has seen it about 30 years ago. And so this is something which cannot be ruled out completely. Secondly, what this basically means is that there'll be big losses basically to those who hold treasuries currently and rate sensitive sectors like real estate, which already seems to be under some pressure in the US because the lower income group aren't able to afford housing anymore, which means that the demand for housing seems to be quite weak now, especially with higher rates and rate sensitive sectors like insurance as well. So, yeah.
It is I'm in complete agreement that interest rates will stay higher for longer. See, I am of the opinion and a 0.25% interest rate cut is not going to change things.
Yeah.
So the rates have to come down to less than 4% before it has any impact. I don't think till the end of next year, interest rates will come to 4%.
Because the market has already priced it in with the 10-year yield less than 5%.
Yeah, that's not happening anytime soon. So there might be a 2-3 cut next year, 1 cut this year and 3 cuts next year. But that will only keep you between 4.25 and 4.5.
Yeah.
If you cut too fast, of course you can have low interest rates. Then you are allowed to tolerate higher inflation.
Which notoriously the Federal Reserve does not tolerate.
No, because the people will not tolerate.
Of course, yeah.
So if you allow, the choice is clear. You want to borrow more, pay more interest, and make it difficult for the people to own hard assets. Or if you cut assets, if you cut the cost of money to negligible, then be ready to face a high inflation.
Of course.
And I think what will happen is, I don't think inflation will go to 2% anytime soon, nor do I think interest rates are going to go to 0 anytime soon. So neither is going to happen.
Right. And something which the other side of the debate, for those who are more on the Keynesian side, they say that, look, fiscal responsibility can destroy wealth. In the sense that responsibility, by that I mean austerity. By saying that you're going to cut down, suppose you've tried your best with the Federal Reserve trying to buy up treasuries when you're increasing your deficit. That doesn't work. And suppose the last resort, even after trying to raise taxation, the last resort has come to you actually declining in terms of your expenditure. That is fiscal austerity. They're saying that it could destroy wealth, like how we saw David Cameron destroy the UK economy through fiscal austerity measures. Hey guys, I'm going to quickly interrupt this video to announce that we have successfully launched our Substack, where we talk about companies, US markets, European markets, and Japan as well. And these insights are going to be delivered straight to you to your email as well as the Substack app. We hope you go check it out. The link is moatinvesting.substack.com. The link will be on the screen right here and also in the description. Thank you for checking it out.
I don't think he destroyed. This is my personal opinion. He did not destroy it. You can only cut the cloth depending on how much you have. If you are irresponsible, and Keynes did not say this, so to call them Keynesian is wrong.
Okay.
Keynes did say that you have to raise taxes. Last 3 years have been extremely good.
But that's the thing. In fiscal austerity, in the sense that you don't raise taxes.
Allow me to finish. Not just
right. But I just want to clarify why I said Keynesian. I said Keynesian because Keynes was the one who said you can raise fiscal deficit and there'll be a multiplier effect on the economy.
Right.
After which, like what you said, there will be taxation. Even if you don't raise taxation and keep taxation the same, you'll basically take a big chunk of the multiplied amount of GDP, which will now pay off your deficit.
What I'm trying to say is that taxes in America and India are very low for the rich.
Yeah.
Now, if you spend money in Corona, then you have to increase taxes at this point of time. You cannot keep spending at the level of crisis and not raise your taxes.
One more point, Cameron was quite friendly with the rich.
Of course he was.
So,
anybody who cuts taxes, I disagree with the word he destroyed. Liz Truss did have a problem.
She was the nail on the coffin.
Yeah. So what I'm trying to tell you is, you cannot run a deficit and keep taxes low. What they are trying to do in America, nobody wants to raise taxes. They want to keep spending high and they just want to print currency. That means you have to tolerate higher inflation. As simple as that. You have higher inflation and you will have higher interest rates. So that is why Howard Marks says the era of the zero interest rate is over. So he says it will be between 2 to 4. I think it may be on the higher side of that equation. It may be between 3 to 4.
Okay.
This is my opinion. Howard Marks is more experienced. He says it could be between 2 and 4. So 2 is not coming anytime soon. On that, me and Howard Marks are on complete agreement.
Okay. Before we continue the discussion, I want to talk about the mechanism behind why issuing more treasuries creates more money in the economy. So when the government issues a treasury bill, what ends up happening is that you as the investor end up buying that treasury bill. Let's say for $100, you buy the $100. Your net worth remains the same on paper. You still have $100 in your net worth. At the same time, the government has now officially raised $100 by issuing that treasury bill and letting you buy it. So if you actually look at the net value in the economy now, you have $200 in the economy because of this one transaction that has occurred. And if the government spends this $100 which they've raised from you, they eventually will end up pushing it into private hands or the private sector. And this will mean greater profits. Unless this money is absorbed by taxes, this will go and chase assets, driving up prices.
Yes. But see, if the money from the banking system leaks only to the rich, they get the access to cheap credit, you will have an inflation in asset prices. If the middle class gets a hold of the money, you will have general inflation plus inflation in asset price. Right. What the world saw between 2000 to 2020, except during the crisis, was an inflation of asset prices. And when money was handed over back to the people for not working, you still had an inflation in stock market prices. So inflation in any form is not good, whether in stock prices, asset prices, or even general prices.
So one economics equation states that if savings and investment do not change, profits must rise as a result of a larger fiscal deficit.
Yeah.
So what this basically means is that if corporate profits rise, then the market can grow into the valuation it is being given currently.
That is current, but how long will you do that? Because cost of goods will also go up. Cost of services will go up. So people will get fed up and they'll vote you out.
Right. So the final question for this discussion is, where do you see fiscal deficit rising at the current rate is rising at in the next 3-4 years, or do you think the government will be forced to take its foot off the gas pedal?
I do not know whether they will succumb to force. Definitely, I see higher inflation either if Trump wins or
If
Biden wins.
you don't think even if Trump comes in, the deficit is
No,
going
he is
to
already saying that he'll cut taxes,
right?
so which will exacerbate the problem. So to keep at the same level, you will have to keep taxes higher.
Yeah. So that's all I have for you today.
Thank you for watching Be Rich. If you like this video, subscribe to our channel and turn on the bell notification. Kindly pass this video to your friends and relatives. Once again, I thank you for your support for Be Rich.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.